Hi, this is Nick Dautine with FS Grain. Today is Tuesday, February 28th. Grain markets were under pressure for much of today's session. Most of this was technical selling pressure with bids rolling from March to May futures and end of month profit taking. Had rumors that China is washing out of Argentina soybean purchases, adding to some of the negativity in the tone in the soy complex. Beans took additional negativity from heavier than expected deliveries. Corn and wheat are already approaching technically oversold levels, so this limited some of the liquidation in those markets. South American crop estimates continue to work lower, which was supported for all contracts today. The trade's waiting for confirmation on the Black Sea corridor extension, but no timeline's been given. The current agreement expires March 19th, with China being the destination for about 20% of the exports in this region, so should help keep the corridor open. Markets continue to suffer from lack of fresh news and limited money interest. May futures finished today's session down about 13 and a quarter cents to 630 and a quarter. December corn futures were down about 6 and a quarter at 569 and 3/4 on the board. That's giving you roughly 545, just under 550 cash at a lot of locations throughout our draw territory. That's down about 27 cents since last week. Corn futures did struggle today from lack of buying interest, but the fact that the complex is already oversold limited a lot of the heavy selling. We're down to 12-week lows in the corn complex and starting to see some harvest pressure with Brazil nearly 28% done. Majority of the corn is used domestically, so doesn't have a huge impact, except it does pump up the inventory for our global balance sheet. Also starting to see some corn plantings in the U.S. with the Texas crop reported at about 5% planted, which is about on par with average. Did see May beans down about 33 cents to 14.79 on the board today. November 23 futures were down almost 25 cents to 13.47. That's, flirting with $13 or better fall cash, and that's down about 52 cents since last week. We were button up against, some of the highs that we have seen all the way back since August, September of 2022. So not overly surprising. We've been range bound since then, but this dramatic sell-off has started to pick up over the past few days. That does put our fall ratio down around 237, so it's still favoring corn acres. It's going to be interesting to see how weather does play out with plantings coming up. The prospective plantings report comes out March 31st, so there'll be a lot of eyes waiting to see what happens and comes from that. And right now, we're recommended to be, depending on your risk profile and who you're working with, like to be maybe 30% covered, whether that's cash or maybe put options or depending on what your strategy typically is. Have had some great weather this week, so posted roads are out around a lot of the territories, so maybe not a lot of grain movement here nearby. But with markets being range bound, we do have some advanced contracts with our range guarantees that are some good ways to put together a floor while giving some upside potential. So a good thing to be talking about your local originator, and we'll talk to you soon. Have a great day.